Welcome to the deep dive, where we try to cut through the noise of earnings calls and all that complex financial jargon.
Yeah, get straight to what actually matters.
Exactly. Bring you the essential insights. Today we're diving into Agios Pharmaceuticals, ticker AGIO. We're looking at their Q2 2025 earnings call, which happened back on July 31st.
Right.
And our mission, as always, is pretty clear. Pull out the key numbers, unpack what management is thinking strategically, and, help you understand what it all could mean for the company's path forward.
Definitely. It's an interesting look at a biotech playing a calculated long game, I'd say.
Okay, so let's jump right in. What were the headline numbers that hit the wire?
Well, at first look, the numbers for Agios show, maybe a mixed picture, but definitely an intriguing one.
Yeah, that's fair.
On the revenue side, they reported $12.5 million net revenue.
Yeah.
Now, that significantly beat the consensus estimate, which was, around $9.46 million?
That's right, a solid beat.
Yeah, and it's a strong 45% jump compared to last year.
Yeah.
Really highlights the commercial momentum for PYRUKYND. Good execution there for sure.
But on the other side of the coin, their GAAP earnings per share, that came in at negative $1.93. And that missed the consensus, which was looking for negative $1.74.
Mm-hmm.
So you've got this revenue beat, but an EPS miss. What do we make of that? How does that fit into their overall financial picture?
Well, it's fascinating when you put that EPS miss and the related net loss of about $112 million for the quarter into context.
Okay.
Because that number, it might make you pause initially, but it really reflects deliberate strategic investments the company's making.
Right, spending money to make money, potentially.
Exactly. And the critical point, the real strength here, is their liquidity. Agios ended the quarter with a very healthy $1.3 billion in cash and marketable securities. That's as of June 30th.
$1.3 billion. That's substantial.
It is. It's not just a cushion. It's a serious war chest.
Mm-hmm.
It gives them a long runway for operations and, crucially, for funding that ambitious pipeline development without, immediate financial pressure breathing down their neck.
Allows them to be aggressive.
Precisely.
Okay, $1.3 billion in cash definitely gives them flexibility. But how does that stack up against their cash burn? Especially with these R&D investments you mentioned. Should investors be worried about that burn rate given the net loss?
That's a sharp question, and it gets right to the strategic narrative. The burn rate is absolutely something to watch, no doubt.
Mm-hmm.
But management's message is clear. These are investments, not just costs frittered away. They fully expect returns from future approvals and launches.
Okay.
And we're already seeing some early positive signs. PYRUKYND continues to show that commercial momentum, which suggests their sales efforts are indeed paying off.
Right. The PYRUKYND sales momentum seems to be a consistent bright spot. What are the key metrics that really show it's being accepted in the market?
Yeah, the KPIs there are encouraging. They saw 248 unique patient enrollment forms this quarter. That's up a healthy 6% from the previous quarter.
Okay.
And maybe even more importantly, 142 patients are now actively on therapy. That's a 4% sequential increase.
So steady growth in actual patients getting the drug.
Exactly. This consistent uptake isn't just about sales figures. It signals that doctors are accepting it, and the commercial team is effectively reaching patients with PKD pyruvate kinase deficiency.
That rare genetic disorder affecting red blood cells.
That's the one.
Okay, so beyond just the top line numbers, the story is how Agios is actually funding this growth. Let's dig into that capital allocation. You mentioned the increased net loss reflects deliberate investments.
Mm-hmm.
R&D expenses climbed to $91.9 million, up $14.5 million year over year. And that included a $10 million milestone payment, right, to Alnylam for AG236.
Correct. That was part of it.
And then SG&A, selling, general, and administrative also went up. $45.9 million, an increase of $10.4 million from last year. So what's really driving these bumps in spending? What does it signal about their priorities?
Yeah, if you connect the dots, these increases boil down to two main strategic pillars. First, like you said, the pipeline investments. At $10 million for AG236 is a good example.
Tell us a bit more about AG236, TMPRSS6 siRNA. Sounds complex.
It is pretty cutting edge. siRNA is small interfering RNA. Think of it like a molecular dimmer switch that can silence specific genes.
Okay.
In this case, AG236 is designed to dial down red blood cell production by targeting the TMPRSS6 gene. It's a novel approach for polycythemia vera, which is a chronic condition where you make too many red blood cells.
So a new way to tackle that disease. Investing there shows confidence.
Definitely. And the second pillar, driving spending, is gearing up for that potential commercial launch of PYRUKYND, but this time for thalassemia in the U.S.
Ah, the next big indication.
Exactly. Management was very clear about disciplined capital allocation, really prioritizing these potential U.S. launches because that's where they see the biggest commercial prize.
Makes sense.
And what's really interesting is how they're managing the global piece. They're using these capital-efficient partnerships. Revenue-sharing deals with Avanzanite Bioscience in Europe, NewBridge Pharmaceuticals in the Middle East, the GCC region.
So they don't have to build everything themselves outside the U.S.?
Precisely. It lets Agios keep laser-focused on the U.S. market while still getting their therapies out globally. It avoids the huge cost and complexity of setting up international operations from scratch.
That seems smart, this capital-efficient ex-U.S. strategy. But does relying on partners, limit their control or maybe their share of the profits in those regions compared to doing it all themselves? Seems like a trade-off.
Oh, it absolutely is a calculated trade-off. You're right. Margins might be a bit lower in those specific markets compared to if they built it all out.
Okay.
But it drastically cuts their upfront spending and the operational risk. Building new teams, navigating different regulatory systems. That's expensive and complex.
Yeah, I can imagine.
So this approach frees up capital to pour into the U.S. launches, which they believe offer the highest return. In their view, the focused investment and lower overhead outweigh slightly lower potential profits internationally, especially profits that might take years to realize anyway.
Okay, that rationale makes sense. Understanding the financial strategy really sets the stage for their commercial ambitions. Let's switch gears to how they're actually preparing for that big thalassemia launch here in the U.S. for PYRUKYND. What's the game plan?
They've been quite proactive. They've doubled their sales force. It's now up to approximately 40 employees. That's a significant resource commitment specifically for this new indication.
40 people focused just on thalassemia initially.
Well, transitioning focus, yes. They're targeting an initial group of about 4,000 actively managed adult thalassemia patients in the U.S. That's out of maybe 6,000 diagnosed adults overall.
And they feel confident they can identify these patients.
Yeah, they seem quite confident. Apparently, the ICD-10 codes, the medical billing codes for thalassemia are well established, which makes identifying and reaching that target market pretty robust.
That sounds like a clear, defined target. But I noticed management kind of tempered expectations for thalassemia revenue in Q4, calling it modest. Given the PDUFA got pushed back a bit and the sales team is shifting focus, is this just them being conservative? Or could it signal maybe some headwinds for a really fast uptake right out of the gate? What's the feeling there?
Yeah, guiding to modest net revenue growth for the full fiscal year 25 compared to 24.
Yeah.
And saying Q4 thalassemia revenue won't be material. It's definitely conservative.
Okay.
A lot of that is just practicalities. The sales force is transitioning its focus, which might mean a temporary dip in the push for PKD.
Yeah.
And then there's the PDUFA timing.
Right, the approval date itself.
Yeah, an approval late in Q4 plus the natural lag time. Patient enrollment, getting insurance sorted out, actually starting the treatment. Revenue just doesn't ramp up overnight.
Especially in rare diseases.
Exactly. So I see it as realistic expectation setting, not necessarily a red flag about headwinds. They're managing investor sentiment around that typical slow build for new rare disease drugs.
Makes sense. Playing the long game, like you said. Now, beyond the adults, I think you mentioned a pediatric opportunity too.
Correct. There are roughly 2,000 pediatric thalassemia patients in the U.S.
Okay.
And Agios' plan is to go after that indication after they've really established the benefit-risk profile in adults. It's the same playbook they used successfully with PKD.
Start with adults, build the data, then move to pediatrics.
Exactly. It's a sensible way to de-risk the pediatric program and build up that clinical experience first.
Okay, so beyond the commercial strategy, what really drives a long-term view for Agios is that pipeline. Let's dive into the innovation side. Tebapivat, which is PYRUKYND, and also tebapivat. First up, the thalassemia application, the SNDA. What's the latest there, especially with that PDUFA date?
Right. The PDUFA goal date for PYRUKYND in thalassemia.
Right.
It was originally September 7th, 2025, but it got extended by 3 months. The new date is December 7th, 2025.
An extension. Never what investors love to see, but sometimes necessary.
Exactly. It suggests the FDA needed a bit more time for the review. Could be related to potential label updates management discussed.
What kind of updates?
Things like specific language around monitoring liver safety, hepatic safety monitoring.
Important in thalassemia given potential iron overload issues.
Very important. Clear guidance is key for doctors and patients, and also a potential dose change, specifically to 100 milligrams twice a day, or BID for thalassemia patients.
Okay, so optimizing the dose for this specific group.
Seems like it. aiming for that sweet spot of efficacy and safety based on how thalassemia patients might process the drug differently.
Got it. That's a good look at the regulatory details. What about the next big one? Sickle cell disease, SCD. What's the timeline there? Any new developments?
Yeah, for sickle cell disease, everyone's waiting for the top-line results from the RISE-UP phase 3 trial. That's expected by the end of this year, year-end 2025.
So another major catalyst coming up soon.
Absolutely. And one interesting detail is that the protocols for the open-label extension study where patients can continue on the drug after the main trial now include monthly liver injury monitoring for the first 6 months.
Consistent with the thalassemia program focus on liver safety.
Exactly. They also clarified something about dosing for their other drug, tebapivat in SCD. They're using lower doses in the phase 2 trials there because SCD patients seem to metabolize it similarly to healthy people.
Okay.
That's different from their trials in MDS, myelodysplastic syndromes, where patients metabolize it faster, so they need higher doses.
Interesting. Shows they're really dialing in the dosing based on the specific patient group. Very tailored.
It demonstrates a sophisticated approach, yeah. Understanding that metabolism is crucial for both safety and getting the drug to work effectively.
Okay, sticking with tebapivat. What's the status in lower risk MDS, LR-MDS?
Enrollment for the phase 2b trial in LR-MDS is on track to finish by the end of 2025.
So keeping that program moving towards future data readouts, another potential value driver down the line.
Correct. Adding layers to the pipeline.
And what about the earlier stage stuff? Any hidden gems or new developments we should know about there?
Definitely a couple of things to note. That IND application investigational new drug was cleared for AG236. That's the TMPRSS6 siRNA for polycythemia vera we talked about earlier.
Right, the gene silencer. Getting the IND cleared is a key step.
It is. And also, their phase 1 trial for AG181 is moving along. That's for phenylketonuria, or PKU. It's a multiple ascending dose trial.
Now, PKU, didn't a competitor just get an approval there recently? Makes you wonder, what's Agios' angle with AG181? How do they see it competing? Is it potentially best in class?
That's a great question, and they addressed it. Management basically said their PKU plans are unchanged, despite the competitor approval.
Why so confident?
They're really emphasizing AG181's novel mechanism of action. They believe it could be a best-in-class oral therapy, specifically targeting patients with high unmet needs. Meaning patients who maybe don't respond well or at all to the existing treatments. So they see differentiation. They're not just aiming for a me-too drug. They think they can help a specific group that still needs better options.
Betting on a unique mechanism for an underserved population. Got it.
Exactly.
So if you're tracking Agios, the next few months look pretty packed. Can you just map out those key catalysts for investors again?
Sure thing. The catalyst map is quite clear and pretty busy through early 2026. First, Thalassemia US PDUFA date, December 7, 2025. That's the big near-term one.
Yeah.
Second, RISE-UP phase 3 top-line data for sickle cell disease, expected by year-end 2025.
Two major readouts potentially close together.
Right. Then, looking internationally, EU regulatory review via their partner Avanzanite, expected early 2026. And approvals or procurement starting in the GCC region via NewBridge in the coming months.
And one more.
And finally, completing enrollment for the tebapivat phase 2b trial in LR-MDS.
Yeah.
Also expected by year-end 2025.
Wow, that is a packed calendar. Lots of news flow coming. How does that overall strategy, the capital-efficient partnerships outside the U.S., how does that play into the investor picture with these crucial U.S. events looming?
It's actually quite important contextually. That strategy lets them pour resources into these critical, high-value U.S. launches without overstretching financially.
Keeps the focus sharp.
Exactly. It's a balanced approach to global expansion. So for you, the investor watching this, the immediate things are clearly that thalassemia label, what does it look like post-PDUFA, and the SCD data from RISE-UP. Those are paramount.
And how's the market reacting?
Well, the initial reaction to the earnings call was interesting. A little dip, then it recovered. It suggests investors appreciate the revenue beat and that strong cash position.
The $1.3 billion.
Right. But they're waiting. They want more de-risking, clear regulatory wins, positive clinical data before maybe committing to a significant re-rating of the stock.
It really underscores that point about small and mid-cap biotech, doesn't it? Funding is still selective, so hitting those regulatory milestones and showing pipeline progress. That's what really moves the needle.
Absolutely. Execution on those catalysts is everything.
Okay, we've covered a lot of ground on Agios today. Now it's time for our segment, This is Not Financial Advice, and we have to stress, what follows is purely for illustrative, educational purposes. It is not financial advice. Please, Always do your own research and due diligence.
Absolutely. Got that crucial disclaimer out of the way. So let's think a bit creatively about Agios. You've got the PDUFA extension for thalassemia pushing that catalyst to December 7th, and you've got the RISE-UP SCD data expected by year-end.
Right, two big events clustered.
Exactly. Now, one thesis, maybe an outrageous one, is that the market might be a bit too cautious right now. Maybe it's underpricing the probability of both of these significant catalysts hitting positively in a short time frame.
The PDUFA extension created maybe a bit of a sentiment dip.
Potentially. A temporary soft spot that might offer a moment to look again before these readouts. The outrageous part isn't that the drugs might work, but that the market might be underestimating the combined impact, especially when backed by that $1.3 billion in cash. That cash really buffers against near-term dilution risk, makes a catastrophic failure less likely.
So the idea isn't just a bet on one binary event, but maybe on a sustained positive momentum if both things go well.
Precisely. The thesis wouldn't be just about one catalyst, but the combination: potential approval, positive data, strong cash, smart commercial strategy. So how might someone think about that from a trading perspective? Again, purely illustrative.
Illustrative only.
Right. One might consider something like a conditional bull call spread, maybe expiring sometime in mid-2026.
Okay, break that down.
You'd buy call options at a strike price that reflects, say, a successful thalassemia launch and positive SCD data. But to offset the cost and define your risk, you'd simultaneously sell higher strike call options.
Limiting upside but reducing cost and defining risk.
Exactly. And targeting mid-2026 gives you time not just for these immediate catalysts, but also to potentially capture upside from the early thalassemia commercial traction and more clarity on the global rollout.
Yeah.
It leverages the pipeline momentum and the de-risking from that capital-efficient ex-US strategy.
Yeah.
It's a way to play for sustained reevaluation based on multiple drivers materializing.
Interesting thought process there, connecting the strategy, catalysts, and financials into a potential structured trade idea. Again, not advice.
Not advice. Just food for thought.
Okay, so let's recap. Agios Pharmaceuticals seems to be making solid progress on its 2025 goals. They've got that strong balance sheet, the $1.3 billion, and a very clear strategic focus on their PK activator franchise.
Targeting that pyruvate kinase enzyme to boost red blood cell health.
Right, and showing its potential across different rare blood disorders. With multiple big catalysts coming up, thalassemia, PDUFA in December, RISE-UP SCD data by year-end, the company looks poised for a potentially transformative period.
Could be a breakout year if things go well.
For sure. This story is definitely not over. And it makes you wonder, doesn't it? Beyond hematology, where could Agios point its innovation next? What other unmet needs could they tackle to build a more diversified rare disease portfolio?
That's the long-term question, absolutely.
Yeah.
Where does the platform go from here? A fascinating thought.
Indeed. Remember, everyone, this information is for educational purposes only. It is not financial advice. We always encourage you to do your own thorough research and analysis. Thank you for joining us on the Deep Dive.
Yeah, thanks for listening. We appreciate your time and hope this was insightful. Feel free to share your own thoughts on Agios.